Australians are being warned interest rates could start rising sooner than we thought. That's because of an unexpected fall in the nation's jobless rate. SBS business reporter Ricardo Goncalves joins us now. And Ricardo, some economists predicting that unemployment has peaked.
That's right, Anton. Janice, it's a big call, but today's data from the Bureau of Statistics may back that up. Australia's unemployment rate has fallen from a revised figure of 6.1% to 5.8% in March. But that result was helped along by a 40,000 position increase in part-time jobs. Full-time jobs actually fell by just over 22,000. And after doing the math, employment rose by 18,100. And the trend looks good. Here's ComSec's Savant Sebastian.
Really, the last 3 months, jobs growth of 88,000 new jobs created across the Australian economy, something we haven't seen take place in about 2 years. So it does seem to suggest that the labour market is turning and really reflecting now the recent economic improvements across the economy.
Now, that improvement is reflected in our currency, which has surged from its low point of around 88 US cents and is trading at around about 94 US cents, which is where it is right now. The headlines may focus on high-profile job losses at airlines, car makers and other manufacturers, but don't forget the good stories out there. Earlier this year, Coles, for example, said it would hire 16,000 people over the next few years. Woolies, 7,000 this financial year. The RBA acknowledges that trend.
Well, the Reserve Bank Governor in his speech in Hong Kong a couple of weeks back did mention that business hiring intentions are lifting. We've seen that profitability in the forward order books are also filling up. And I think it's signs now that the business sector is getting its mojo back and starting to see a pickup in employment. So that's a very good sign. If you couple that with the fact that hours worked are also lifting, it does seem to suggest that period of consolidation is past us.
That does, however, increase the chances of an interest rate rise. ComSec says the first may come at the back end of the year. The timing will depend on the next inflation report due out later this month. Now, still on jobs, Spain has also seen an improvement in its unemployment rate recently, but later in the program, we'll take a closer look to see if that improvement is translating to the streets.
Spain has 6 million unemployed, but only creates about 60,000 new jobs a year. At this rate, it'll take them a whole century to plug the hole, and even the success stories aren't helping enough.
And that takes us to the Australian share market now, which has closed at levels not seen since 2008. A stronger banking sector offset falls in resource stocks. DJs rose. 10 also made gains after it narrowed its first half loss to $8 million. Telstra closed steady. Tokyo's Nikkei ended flat as exporters took a hit from the yen's rise. Wall Street rose after the Fed Reserve minutes showed no support for an early rise in interest rates. The Aussie dollar has ended the day stronger. As mentioned, it's also up across the other majors, and on the commodity markets, both gold and oil are higher. And Anton and Janice, that is the day in finance.
Thanks, Ricardo.